Welcome to the CLS Monthly Market Review. I'm Brian Ragle, Senior Vice President of Regional Sales. I'll let you guess what part of the region I'm from. But I'm here with Rusty Vanneman, our Chief Investment Officer
Hey, Brian.
of CLS Investment Firm.
Yes, indeed.
Good to have you, sir.
Welcome to Omaha again.
Thank you. It's great to be here.
Yeah, it's nice to have you here.
Well, it's been an interesting time in the markets. We've had a nice year so far. Things have kind of perked up for the first couple of months. So tell us how the CLS portfolio is performing against that backdrop, and tell me what those markets are doing right now.
I would say it's always interesting times in the market, always.
True.
And you know what? It's been a great summer, and a great summer has really had the markets now have had a great year. And it's been a great year to be a global multi-asset manager. I mean, think about it. Stocks are up. International stocks are up, particularly emerging markets.
Right.
The bond market having a great year. High yield bonds are up double digits. Commodities are even up big this year. So, you know, things are really working, and things are working well for CLS portfolios. It's been a good year, and a lot of our active tilts have really come through.
It's fantastic to hear. I know, when we have these kind of markets where you have one or two asset classes that outperform for long periods of time, it gets kind of tiresome because it looks like diversification is not really working in the short term. But we all know over the long term that those things work, and it's glad to see that diversification is paying off this year for us.
Right on. Yeah.
Fantastic.
Indeed, yeah.
So active management has had a difficult year so far this year versus those that kind of stay invested and don't move things around.
Yeah.
Tell me, are there active managers that might have been doing better or worse, or why do you think that is this year in particular?
Well, you're right on. I mean, at the middle of the year, we'd seen a study that said this is the worst year for active management since 2003. So it has been tough. But active management, we think, still makes sense for a lot of reasons. Again, we're doing pretty well this year, but it isn't just about the performance. It's about everything that goes with it, the communication, the education. I think all that kind of ties into it. I think there's a good example of a firm that does active management really well, and that is, of course, the American funds. We have a strategy that's in that. And there's a lot of things about the American funds, I think, that speaks well to active management. And it shows in their performance. Their average fund is in the top third of their peer groups, their average fund, over all the recent time frames. There's a couple of things they do that we do too. And one is they do take a team managed approach. All our strategies and all of our funds are team managed. They have a long-term orientation. They hold things for at least 3 years on average. That's like us too. And the biggest thing is they eat their own cooking. Here, all of the investment team is their bonuses are based off of performance, investment performance, and we do invest in our own funds. So I think there's a lot of overlap, and I think there are things to look for in actively managed funds. Now, I know you obviously have been talking and watching American fund strategies too. I mean, do you have any other comments? Absolutely.
I mean, back when I was an independent financial advisor, I used American funds a lot with my clients. It's hard to resist their overpowering track record for picking stocks decade after decade after decade. And active management has been a key role in what they do. They used to call it their star system, where they had their managers and they gave them freedom within their funds to do certain things, but then they had that committee that kind of rounded things out. Now they call it, I guess, their capital system.
That's right.
After their
Just
name.
Different name, same system.
Same system, but they've been very consistent. And I think when you take a CLS and you look at our 25-year track record of managing risk, an American small cap world manager is still going to be investing in small cap world stocks. And that's what his mandate is. But when it's not necessarily the right time to overweight that particular area of the market, we can take that client to a different part of the market using American funds and really add a lot of value for the client so that they're not just sitting in a more passive type of rebalanced arrangement where we can not, add so much value. CLS has been very good with that risk overlay of really making sure that portfolio stays in line with the individual investor's risk.
Right on.
And that's a huge win for the investor and the advisor.
I agree. I have a question for you.
Sure.
So the market's at new all-time highs. What are you hearing out and talking to investors and advisors? What do they think about it?
Everybody's concerned. Obviously, you and I have talked about the fact that really is large cap growth for the most part. That certainly international has not had its day in the sun in the recent years, and even small cap and those other asset classes have had difficult times. But everybody's nervous because we are at an all-time high. And we all know that the investor really doesn't need to worry about that if he's truly a long-term investor. But at the same time, there's those investors that have been through 2002 and they've been through 2008. Now they're in their 60s, their 70s, and they're looking at the market and going, when is enough enough? I don't really want that to happen in my portfolio again. I don't want to change my quality of life. And so we bring a protection piece to that portfolio that lets us put part of that client's portfolio into a strategy that will actually remove itself, for the most part, from the market in times of trouble.
Right.
And
right.
it's obviously based on an algorithm. It's obviously something that's not going to avoid any loss. But it's for those investors that really fear that catastrophic event.
I think you hit on the head. I mean, personally, I believe our risk budgeted strategies, pure risk budgeted, it keeps you in the market. They should outperform versus our protection strategies over time.
Right.
But it's about how are you going to keep the investor in the game.
Exactly.
And a protection strategy sometimes is exactly what is going to help. So
it helps them sleep. Right. It helps them sleep better at night. It really helps. And the nice thing about it, it's not necessarily just a preservation of capital strategy.
Yeah.
It's designed to stay in the market if at all possible, so that we don't get whipsawed quite as much. And so it makes for a nice answer.
I like it.
I do too.
You should do this again sometime.
Well, I always love to do this with you.
Awesome.
Anytime.
All right, cool. Next time you're in Omaha,
I will.
You're doing the video with me again.
Thank you, sir.
You got it, Ryan. Thanks a lot.
Nice to be on.
And thank you for watching the monthly market review.